Good morning, everybody. Happy Investor Empowerment Day here at verifiedinvesting.com. We're ready to do some major damage in terms of trading and rushing and crushing the charts today. Excited to get into the action. We're going to go over what happened over the weekend, the impact on the markets, the technical levels to trade today, the different stocks making movement. Crypto saw a big flush over the weekend. There's some key levels there that I want to talk about on some different trades. And ultimately, we'll go over gold, silver, oil, of course, oil with what has been going on. So, listen, if you've been under a rock, what happened? The U.S. struck Iran's nuclear facilities. So far, there has been no blowback from Iran yet on the U.S., although they have threatened it. The markets initially opening lower last night when the futures began, but then very quickly overnight, basically minimal losses. And today we are seeing green. Most people very surprised. Even myself, to see green, I am a little bit surprised. I wasn't expecting a big sell-off because, again, really at this point, it was a one and done. 3 strikes on different nuclear facilities. And as of now, the U.S. is back out of the situation. And I think the markets are happy with that at this point. But if it does escalate, there's always risk of further downside in the market. All right, so we have the S&P 500 up just a little bit heading into the open today. Let's jump right into the charts. But don't forget, folks, it is Investor Empowerment Day. What does that mean? It means yours truly, the Winning Trader series is over 50% off. I think it's about 55% off. So again, grab those. And then also don't forget, all our other courses are 50% off. So again, if you want to do VWAP, if you want to do the sleeper hold play course, that's an amazing one. The 1-minute scalpel will blow your mind in terms of that. All of those 50% off. It's a wholesale sailing day here at Verified Investing. All right, let's get into the charts here and take a look. What do we have? This is the overnight futures. So you can see this was our gap down last night at 6 p.m. on the S&P futures. We had a big push up, like right out of the gate, buyers came in. Look at where we stalled. Isn't that amazing, folks, how technicals still work even in the overnight? Look at that. Right there, pivot low to pivot low. It pushed the markets down. And then watch. Look at this. So see how it pushed it back down here. It came up. It kind of consolidated underneath. Then it pushed through, bull flagged, and then boom, to the upside, pulled back this morning. But look at this, guys. This is why I love charts, because they just blow me away. After 26 years of trading, they still amaze me. The pullback in the S&P, where was the low this morning? At 7:40 in the morning, right there, back at that former level. So this was resistance, rejected, consolidation, breakout, consolidation, bull flag, breakup, retrace to now what was formerly resistance is now technical support, and the markets push up. So again, whether it's during market hours or overnight, the key is volume. And volume is very, very important. In fact, let me touch base on that. I think that's very, very important here. So one of the keys here to understand is that when you look at overnight action, many people ask me, well, when do you use chart levels from the pre-market on stocks? Like, what if a stock trades 100 shares at a lower level? Do you use that as a pivot low? And the answer is you don't. What you have to look for is volume. So if there's a lot of volume traded, for instance, on the S&P futures in the overnight because of the U.S. getting involved with Iran, and it obviously created quite a big volume surge in the overnight, the levels will be tradable in the overnight, the technical levels. Same thing with the stock. For instance, if big news hits in the after hours on a stock, let's say they report earnings, and there's massive volume, like let's say millions of shares are trading in the after hours or pre-market, those pivots will then be important during the day because there's volume there. If, again, like I said, if you have a couple prints from various traders that just did I want to buy 100 shares in the after hours, that's not going to be worthwhile for technical reasons. So this is a little tidbit there. I want to just throw in there a little nugget of insight into the charts. Speaking of charts, let's get back to the S&P. Let's take a look here. So again, if we look at this, what do we have, folks? This is the S&P 500. No lines on it as of now. But if you remember, what do we have? We had this trend line right here. That was the upper part of our wedge pattern. And then our lower trend line right here, right? And so essentially this market had this big fall, consolidation, big fall in February into March into early April, right? From that point, we had the big surge. This was, remember this day when the NASDAQ S&P were up about 10% in one day? That's when Trump backed off on his Liberation Day tariffs as the bond market was starting to kind of send signals it was going to cause problems. The markets then consolidated and then they started their grind. And this, again, this wouldn't be a grind, right? This is a huge move up, big moves down. This is a lot of choppy, wild action. This, my friends, would be considered a grind. The grind starts, it kind of continues up, pulls back, continues up, 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 and then we broke. And remember, folks, I gave you this like a month ago. We had a cycle date that told us there was likely going to be a change of market direction from consistent grind up to more of a sideways and then an eventual turn down. Well, sure enough, right at that cycle date right here is when we broke the wedge pattern. Amazing how the cycles can be that accurate to give you within a couple days of where a key technical pattern will break. Powerful stuff once you start to learn cycles. And just a little side note on cycles, folks. Cycles just aren't applicable to the stock market or the crypto markets or the commodity markets. And by the way, look at since that cycle date, what has happened. I mean, you've had literally the protests in LA, Los Angeles, and what's going on. That was the beginning of it. Then Iran striking or Israel striking Iran and that war starting up. Then the US getting involved, all in the oversight. I mean, just tons of these different things going on. And that's what breeds these cycles, folks, is that it literally takes where everyone's like, oh, this is great, 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 great. And now all of a sudden things start to change. Psychology, it's amazing. Psychology, again, it'll rock your mind when you learn it. And by the way, I've always said, if I had to pick someone to be a trader that had no prior knowledge of the markets, I'd pick a psychologist. Learning human emotion and how to understand it is giving you a leg up in trading. There's no doubt about it. Okay. On to a couple other things here. So S&P again, right now we're setting up to open just a tiny bit higher on the S&P, about 8 to 10 points last I checked. So it's not a big gap up by any stretch, but we are going to be opening higher. The question is, will it last? And one thing we have to be very aware of is, number one, we're below this wedge pattern. So even if we rally back up, this is going to be major resistance right here. Right around this 6,080 to 6,100 level is going to be huge resistance. Then you also have your double top, right? So if we look at the S&P 500, this is also additional resistance. So there's just a massive wall. We could call this the Great Wall of China, whatever the biggest wall you can think about. This is now building into an epic wall of resistance, which is going to make it very hard for the markets to push through that. Path of least resistance, while we may test it, is still to the downside since this break and the cycle has hit. So keep that in mind at this point. All right, couple other things. If we go to the QQQ, same sort of wedge pattern break. Again, the QQQ is setting up to open basically flat on the day. In terms of key movers and shakers, stocks individually, there's only a few names. We'll go over HIMS this morning, which is getting hammered on the back of Novo Nordisk, basically pulling out from their partnership with HIMS. But before we do that, let's get into the dollar. The dollar remains in what we call a megaphone pattern. See how this looks like a megaphone? So a megaphone means you have two lines that are diverging and price is stuck between them. So the US dollar, very clearly here, we have a down-sloping trend line here, right? And that kind of, you can see, it was resistance, then support, support, and right in here, support. And then we also have this upsloping trend line, low pivot, and then notice right here, we hit it, bounced, broke down, which then gave us this low, came back, underbelly. What is that called? It's called a retrace to the scene of the crime. It gets rejected. So essentially what we have on the dollar right now is price action that is stuck between two diverging trend lines, essentially consolidation. So again, at this point, it's consolidation. At some point, one of these lines will give way and price will either break out or break down. I happen to favor the breakdown just because, again, as the U.S. economy weakens, the chances of Fed rate cuts start to go up. You also see de-dollarization slowly, very slowly taking impact with other countries starting to say, hey, listen, we can't be so reliant on the U.S. dollar anymore. Let's start to diversify. And by the way, what's the biggest diversification we've seen these countries do and these central banks do? I should have the Jeopardy theme going here. But basically, if you are answering gold, you are dead on. All right. China has bought tons, literally tons and tons of gold. Other central banks have been loading up on gold for the last 3 to 5 years. And now finally retail is paying attention to this. So I still think, again, I still think there's a lot more upside on gold, but we've talked about how the easy money, that was that first move that I called a couple years ago saying start to load up on gold. And we've had that big move from about 1,800 to about 3,500 on gold. But it's still, I still think there's upside to 5,000-6,000 at minimum, maybe even a little bit further or higher. I just think it could take a little time. We'll look at that gold chart in just a minute, so no worries on that, guys. All right, let's get into the 10-year yield. The 10-year yield short-term support, pivot low, pivot low, pivot low. We're hammering on this here. If this breaks, which again is right around this 4.34 level, so 4.34%, then you likely have continued downside to 4.13. All right, so again, the low 4%. Now, many people out there saying, when are rates going to get back to 2%, 1%? The odds of that because of inflation are very, very minimal, right? And I think honestly, we saw what inflation did when rates got that low and the money printing was at an extreme. And the Fed obviously is showing that it is being very cautious about lowering rates. Now, we know Trump has been hammering Jerome Powell. Every time Jerome Powell doesn't cut rates, Trump comes out and just bashes him. But I think it's important for us as retail investors to understand one thing. The Fed controls the short end of the yield curve, or the short end of yields, the short-term yields. So the very short term, the 3-month, basically the Fed funds rate, the borrowing rate, but that influences the short end. The Fed does not control the 10-year yield, nor the 30-year yield. The market controls that. And so it's very important that for those of us that might be looking to do a mortgage and saying, oh man, I really want to wait till mortgage rates come down, while the Fed can influence that by lowering rates, if the market internals itself don't want to, and they say, nope, the Fed is doing something wrong here, they will keep the long end, the 10-year, the 30-year, the 20-year, they will keep that up. And it's not going to do much to interest rates on mortgages, the 30-year mortgage. All right, so just again, little tidbits like that, we have to understand. So while it may play to a certain crowd to be ripping Jerome Powell on rates and lowering rates, at least on the long end, it doesn't really matter a whole lot. And again, I know a lot of you guys understand that out there, and we've talked about that before, but it's an important point to go over. All right, let's take a look at Tesla, guys. So Tesla launching its Austin, Texas robo-taxis yesterday afternoon. The stock was up in the pre-market. You can see, again, if we bring up our pre-market action, the stock opened higher at 4 in the morning. It came down. It's back up there. But this is the problem. See this trend line right here? If we go right here, guys, what do we have? This is this trend line. Now, listen, the positive on Tesla, guys, what type of pattern is this? All right, let me, in fact, let me get my arrows out so we can draw this. So what type of pattern is this? So I'll draw it over here so you can see it cleanly. That's a bull flag, right? So on a positive note, you have a bullish pattern here. Now, again, bull flags can fail. They do, but they just don't fail as often as they work out. So basically, if you're a probability trader, which is what technical traders are, you would say that odds favor, maybe not heavily, but odds favor a breakout on Tesla. Now, the question is, where does Tesla go, right? Well, Tesla, again, if it breaks above here and confirms, which is around the 332 level, then you would start looking for a retest of 367. But again, do you guys see that pattern, that sharp reversal? So you had this big fall, right? And this was the Trump Elon feud on social media, which will go down in history as just mind-blowing that even happened. But it still did. That was your big drop. Then you had your reversal, bullish consolidation, and the idea is probabilities will favor a breakout on Tesla. Now, HIMS is getting absolutely annihilated here, folks. Again, this stock is dropping precipitously in the pre-market. Closed up here at 64 and a quarter on Friday. It's trading below 49 right now at around 48.60. Now, why is this happening? Basically, Novo Nordisk had a partnership with them, and Novo Nordisk is now breaking that partnership or ending it. And so that, again, comes into the weight loss drugs, all these other things. So that, again, is a big negative for HIMS, and obviously the stock price is reflecting it. Now, what about trading, right? Frankly, I always tell you guys the news, but I don't really care about the news. It's like, okay, the news could have been like someone stood on their head and like fell and hurt their foot or whatever. You know what I'm saying? Like, it is what it is. Where's the chart? As a technician, that's all I care about. If the chart is down X amount, now let me go look and see where the trade is, right? So if we go back to the chart here and we go over to this level and we look and we say, okay, it's trading at around 48 and change. Where is our first technical support? And for me, as a technical trader, see this area right in here? That's what's drawing my attention first and foremost. And that would be right around 45. So right around 45, I would start to maybe think about a day trade on this. Now, this would be just a day trade. If you're looking for swing trades, you got, in my humble opinion, right? And this is just my opinion, but I'm much more careful. Like, I need multiple factors. Day trades, it's good to have multiple factors, but you're only looking for a hit and a quick bounce. Like, literally, you could be in and out of a day trade in seconds or minutes. And so you're not looking for, a 10% move. You're looking for pennies, essentially. Like on something like HIMS, I'd probably look for a 50 cent to $1 bounce and then get the heck out. And then it can go down even more. On a swing trade basis, this might be a better level down here at 38. Pivot point here, pivot point there, and right into that level right there. And if we zoom out on the charts, you guys can kind of see. But this would get me more enticed as a swing trader, obviously with just a starter position where I could add down at these lower levels if need be. But right now, day trading wise, a Pierce of 45 does look interesting. Quickly touching base on Palantir. Palantir is basically trading up a little bit. Again, this is kind of in that security area of the market, meaning that, again, with what's going on with Iran, and Iran, by the way, could look to hurt the U.S. via cyber attacks, different things like that. Palantir gets involved in that kind of stuff. So it's up a little bit, but I will just caution you and say that based on this chart, Palantir is basically has your max upside at around 147, maybe 150 based on this parallel. And you can see every time it hits the low end, it respects it and goes up here. Every time it hits the high end, it comes back in. Here it just hit the high end, came back in. Maybe it goes back up, but you would assume that this would be a double tap and a reversal there as well. All right, let's flip over to oil. Obviously, oil in play today. But look at this, guys. And again, by the way, I still remain short on oil. I've dollar cost averaged beautifully. Remember, as I always talk to you guys about, when I short something, especially as volatile as oil, when you have Middle East stuff going on like this, I'm always dipping a toe in the water, right? And then it leaves me lots of maneuverability. And so while I started shorting at around $66 to $67 a barrel, I've got my average up to where I'm about $73 to $74 a barrel on the short side, right? So I've really maneuvered beautifully, slowly building my core holdings. And the idea, again, is just, that's the way I trade. I trade cautiously in the beginning, knowing that I could be wrong. And if I'm wrong and things escalate, like in the Middle East it has, then you want to be aware of that and maneuver accordingly, right? So again, I always play the defensive game, guys, and that's something that I hope all of you start to take from Investor Empowerment Day today. But again, even if not just watching these game plans, is that, anything can happen at any time, so always prepare for the unexpected. Essentially, it's like buying insurance when you start small is, hopefully you hit it dead on the head and you make a great amount of money on that smaller position. Okay, it was stress-free, but you don't want to be handcuffed when it does go against you, which inevitably a trade will here and there. Now, look at this. This is a beautiful chart, guys. So here's your parallel on this, right? Parallel, gap up. Where did it go? Right back to the parallel line. Isn't that amazing? And so a couple things that are bearish on this. Even with the U.S. bombing Iran, oil did not spike and take out the high from the previous Friday. That's bearish, all right? Because if you think about it, technically that looked like it was an escalation, and oil still did not go up. As long as it respects this line, oil favors pullbacks and downsides, eventually $64 a barrel and maybe even into the 50s later this year. All right, Bitcoin, we got to talk about crypto. Bitcoin, beautiful fall. I covered half my Bitcoin short. We're still in the money on this second half if you're a member of Smart Money Crypto. I also covered Aave for an over 20% gain. And guess what? I even went long. I think I went long 4 different cryptos on Sunday as they flushed down. We're in the money, I think, on every one of them, because some of these altcoins, by the way, were hitting great technical support. I want to show you one. So first of all, Bitcoin, here's a little bit of support. I still think you're probably headed lower, but it is holding this after a pretty big sell-off on the daily chart. If it bounces, this is now going to be resistance around 105,500. All right, so support currently at 100,000. So resistance is 105,500. And if it breaks support at 100,000, you're heading down to 95 to 93. But look at Ethereum here, guys. This is what I'm talking about. So Ethereum, you essentially have this level right here, right? See this former pivot? Look at how this came down, boom, and then bounced. Former high pivot now becomes broke out here, chopped in a parallel. By the way, upsloping parallels are bearish. They break down about 70% of the time. So that's exactly what this did. Down sloping parallel, broke down, kisses support, gets a bounce. Boom. Just like that. Very cool stuff. All right, let's get on to gold here, guys, as it is getting closer to the time where I got to get on the live day trading room. Don't forget, guys, this afternoon, actually starting at 11:30, we have Trader's Edge Crypto live here for you on our homepage, though. Remember, you got to come to Verified Investing. The homepage is where we're doing everything the rest of the day live there. So Trader's Edge Crypto, where the traders will be trading crypto for an hour. We then go right into some interesting interview stuff and some fireside kind of roundtable chats. And then in the afternoon at 1:30, we're going to be trading live stocks, ETFs. We'll be trading there. You'll be with us in the live day trading room, essentially. As we trade, we analyze, we talk about charts, all that fun stuff. All right, back to these charts here, guys. Gold, just a whole lot of sideways chop. Gold is basically trying to figure itself out here. Again, is it going to break up if things escalate around the world, maybe break out, or does it come back and test? Really, there's not much to update you guys on gold here. It is just chopping sideways. Again, as long as it holds this longer-term uptrend. In fact, I want to change the color on this because this one is important. I'm going to put that color there. This is your uptrend line. As long as you hold this, the bias should remain bullish. If you break the uptrend, well, what do we think would be, right? You'd start to look for these lower technical supports. Lastly, silver here, guys. Actually, we haven't done nat gas either, so we'll do that. Nat gas or silver is holding steady. Here was the wedge, broke, failed. I'm still waiting patiently here if it gets here to buy. And then natural gas here, guys, real quick. Beautiful. I mean, this was picture perfect, guys. I'm a little annoyed at myself for not taking a shot at it as a trade. I did not get this as a trade. I gave this as a high risk level, and then I kind of stood back. But either way, you could see that the technical chart support becomes resistance, 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 rejection. I mean, it's just that's case in point. So again, just a reminder, guys, all our courses are 50% or greater off. This is the time. Listen, we're not going to do another sale for a really long time. This is the one chance. We'll run it all week long. You can get these courses again, which will change again, it's investor empowerment day, right? It's about empowering us as retail investors to fight back, to fight against the institutional money that tries to bully us every single day. We can do it, but we got to educate. I mean, that's just the bottom line. You got to be able to learn the techniques that can put you on par with Goldman Sachs, with BlackRock, with these other players. All right, guys. Thank you guys so much for tuning in. Thank you for your support. We're going to do giveaways the rest of the day. It'll be a great day. Please tune in on our homepage starting at 11. Actually, even now, we're going to have great content running, but you guys can be there. We hope to see you there. Take care.